I've been trading the markets for 8 years, and this one strategy has made me rethink my entire trading system. In the past, I've been a big advocate of higher time frame trading, low leverage trading. However, this is a lower time frame scalping strategy that works best on the 1 minute time frame. This is the same strategy that I live trade inside of the Discord, and when you follow all of the rules laid out in this video, this has at least a 70% win rate. Now, I don't want you guys to take anything I'm saying at face value. After you guys watch this video, I want you to go back and backtest this yourself. Don't listen to me, a random person on the internet. Do your own due diligence and going and looking into the strategy yourself. So let's jump into the video. Okay, so here are a few of the trades that this strategy caught today. I'll go over why some of these are invalid. We can actually go back to the prior day. Okay, this was a trade that we took on the live inside the Discord, following the exact same system that I'm going to be going over with you guys today. Now, this works best on NASDAQ on the 1 minute time frame. So this is a futures trading strategy. Okay, step one, you are looking for a liquidity sweep. Now, ideally, you would want this to be an external liquidity sweep, right? So what is the difference between an internal and an external liquidity sweep? An internal liquidity sweep is going to be a lower time frame, right? Like this, I would consider is an internal liquidity sweep or an internal liquidity sweep. An external liquidity sweep is going to be a key higher time frame level. Okay, so this is going to be a previous day low, a previous day high, right? Oftentimes you'll see reactions from these levels. Right? Again, sweep of previous day low, sweep of previous day low right here, sweep of previous day low, sweep of previous day high, sweep of previous day high. So those are going to be your external levels. These are the levels that we really want to look at. Step number two, we are looking for an inverse fair value gap within a few candles. So a bearish fair value gap in this case, breaking this level, and then we immediately get a bullish candle closing above, right? Very important that the candle actually closes above that bearish fair value gap in a V-shaped reversal. That would be your entry, stop loss below that fair value gap, and then targeting your draw on liquidity, which could be another external high or an equal high. Okay, an equal high is a very strong draw on liquidity. That's what we have gotten over the past few days. So we'll jump into some chart examples in just a second, but this is a formation that you want to see. Okay, sweep of external liquidity followed by a sweep of internal liquidity into an inverse fair value gap within a few candles. And yes, we have coded all this into our manipulation X indicator. So if you want to remove some of the guesswork, have it a little bit more hands off, we do have an indicator based on the strategy with a ton of different optimizations, right? There's your V-shaped reversal. You can have it only showing your most recent trades to not clutter your chart. Okay, we also have bullish and bearish divergences in there as well. The only filter that I will have toggled on most of the time inside this indicator is the V-shaped reversal. This means that we need to see an inverse fair value gap within 5 candles. Okay, you absolutely do not need this indicator for the strategy. I'm just going to be using this as an example because it makes finding these entries a little bit easier. But if you guys want access, you can click the first link in the description below. So let's look at the trade today. Okay, also you guys should only be trading this from 9:30 to around 11:30. I mean, you can trade in the afternoon as well, but this works best around New York open or 9:30 a.m. Eastern. Okay, so we have market open. You can see that price sweeps this low to the left here. Now we did not see a sweep of the previous day low. So we did not have a sweep of external liquidity in this case. However, this would still be a valid trade, not an A+ setup. This would still be a valid trade because we had this very nice equal high target. Okay, so whenever you see you have one high and then a second high right below that, right, creating this equal high, this is going to be a really bullish target. Okay, as long as price does not come up and take out this high, this means that there is a large liquidity pool here that price will oftentimes gravitate towards. Okay, so because we saw a V-shaped reversal, because we saw this equal high target, we also had an SMT with ES. This would be your trade this morning. A 1-to-1 risk to reward, you're out. Okay, let's go to the previous day. Okay, so number one, we have a sweep of external liquidity. This is also a key level because this was the previous day low. And then look at the price action here on the 1 minute time frame. A sharp move down on market open, followed by that V-shaped reversal with that inverse fair value gap. There is your entry, and you would take profit once again at this equal high, right? So make sure to always look for these protected highs or these equal highs in the market. I even told you guys on the live stream that I was expecting price to take out all of these highs for the day because we have a ton of protected highs, right? Where price has not come up to take out any of these highs yet. So this was a really good target for end of day. So this would be an example of an A setup. Now you guys are probably thinking, well, is it really this easy, right? Can you just take a V-shaped reversal at market open? And for the most part, yes, like this is 90% of the strategy. As long as you understand where your draw on liquidity is, where your bias is for that day, if you have a clear equal high target, This setup alone is very, very profitable. Now you might be looking at the chart and saying, well, what about these other signals, right? What about this short signal or this short signal? Guys, you're not taking every single signal you get. This is not a sweep of external liquidity. This is not a sweep of external liquidity, right? If you understand where the draw on liquidity is for that day, it is going to be all the way up at the external highs over here. And this is where you'd be looking to enter a short position, at a sweep of these highs, but not anywhere over here. Another thing to watch for when you're trading this strategy is that make sure you are longing in discount. For example, I am not going to take this V-shaped long position, even though this would have hit my take profit, okay? I am not longing at a discounted price. I am longing high, right? Like we are at these liquidity levels here. I want to be longing as price is sweeping, once again, these external levels. So these signals are very easily mitigated by just waiting for that external sweep, right? Not an internal liquidity sweep, but a higher time frame, key level, a previous day high, a previous day low, pre-market high, pre-market low, that sort of thing. So by now you guys understand how the strategy works, right? You're waiting for an external liquidity sweep. You're waiting for a V-shaped reversal. You want to make sure you have your bias in mind. You have your targets beforehand. Again, another equal high right here to target. But what does an A+ setup look like? An A+ setup is going to be when price is delivering from a higher time frame fair value gap, okay? This is like the ultimate setup here. Whenever you see this, you can like almost full pour, honestly, because this rarely ever fails. Okay, so you can see here, we have a 15-minute fair value gap that just gets filled here on a lower time frame. So what we're doing as price is coming down to this 15-minute fair value gap, keep in mind, we're sweeping external liquidity here, is we are looking for that V-shaped reversal, which we get right here. So now on top of the external liquidity sweep, on top of the equal high target up here, on top of the V-shaped reversal, we now are delivering from a higher time frame POI or a higher time frame point of interest. So whenever you see, you have, let's say, a 15-minute or a 1-hour fair value gap, our indicator will automatically load these in as well. And then you see a V-shaped reversal within that higher time frame fair value gap after sweeping external. Here is your inverse fair value gap. I'll change the color of this. Here would be your inverse fair value gap, and this is your entry. This would be like a true A+ setup, okay? If you have equal high targets here as well, this would be your true A+ setup. You can take this every single time you get. And this was a trade that we got earlier in the week. And obviously this trade hit full TP. Now, again, looking at the current price action, I would not be trading any of this chop. Okay, number one, it's outside of my time window. So when I'm trading NASDAQ, I only trade New York Open. I trade from like 9:30 to like 10:30 most days, and then I'm off. So again, if we just look at market open, you'll see a lot of the times we get this V-shaped reversal right during market open. That's why we call this indicator the manipulation X indicator, because you are literally catching the manipulation move during market open. Go to the previous day, we had the exact same setup yesterday. I mean, if you guys caught this, like this one ran like 5R if you caught the whole move. Go to the previous day, we saw the exact same thing. Sweep of liquidity here during market open. Boom, there was your sell signal. There was a manipulation move. And you had, once again, an equal low target here for TP1. Again, go to the previous day, we saw that A+ setup right here off of that higher time frame fair value gap. Okay, go to the day before that, we have a nice V-shaped reversal, sweep of internal liquidity. We also did have a sweep of external liquidity as well, so both of these signals would have been valid. Probably a break-even trade for the first one, and then definitely a winning trade for the second one, right? Trading from 9:30 to 11 on these V-shaped reversals. Now, how do you manage the trade, right? Where's your entry? Where's your stop loss? Where's your break even? Where's your take profit? Your final take profit is going to be your major draw on liquidity. In this case, that's going to be this equal high here, right? An equal high is always a very strong draw on liquidity. So whenever you see this move, look to have equal highs above. That's going to be a really good target. Now, when you enter the trade, you want to enter a market order as soon as the signal confirms on the indicator, right? So as soon as you get that candle, you enter the trade. You have a hard stop loss below that bearish fair value gap, right? Kind of near that swing low. And you're moving your stop loss to break even after the most recent structure high is met. So if I'm entering this long position, I'm moving my stop loss to break even at this high right here, okay? So I'm moving my stop loss to break even pretty quickly. As soon as price reaches here, my stop loss is now at my entry. I have locked in a neutral trade at the very worst, and then I'm targeting my major draw on liquidity or this equal high as my take profit. But that's gonna be it for this video. Again, go and back test this yourself. Make sure it's sweeping higher time frame liquidity. Make sure you're seeing a V-shaped reversal during that New York open window. Make sure you're seeing a strong bullish candle. It should be a very obvious inverse fair value gap, not a small little inverse like this. It should be a very obvious with volume, with momentum, inverse, make sure you have an equal high or equal low target. That's going to be a very strong draw on liquidity, or at least have a bias for that day and have very clear targets as your take profits. If you're delivering from a higher time frame fair value gap, it is going to be a higher probability setup, but these are less likely to play out. Just because it's not delivering from a higher time frame fair value gap does not mean that you can't take the trade. And yeah, if you guys do all of that, you should be good. If you guys want to trade the strategy with me every single morning, click the first link in the description below. We are not just a NASDAQ group. We are a crypto group, but we're also incorporating NQ now. There's a ton of sauce inside the Pro Discord. We have 100 plus 5-star reviews on WAP. So if you're a struggling trader, I'd highly recommend live trading with us. Click the first link in the description below. Subscribe to the channel for more trading content. I'll see you guys next video.